Hey there, dividend growth stock investors. It's Colby, the DGA Crab, coming to you with episode 3 in a favorite series of mine, the Great Dividend ETF Race, where I'm investing $5 every single week into 8 of the most popular dividend themed ETFs out there on the market right now. The idea with this series is to show that anyone can invest, even if they just have a small amount of money and not a ton of knowledge or even desire for that matter to keep up with individual stocks and their performances. And before I jump into the race, I will say I'm not a professional investment advisor. You should always do your own due diligence before investing in anything. The opinions expressed in this video are just the opinions of this one DGI Crab. So with that, let's jump in. So if you're new, these are the 8 ETFs that I've selected for the channel. We've got VYM, VYMI, VIG, VBR, SCHD, SPYD, DGRO, and DHS. All of these are dividend themed ETFs with their own unique strategies. So while there is certainly going to be some overlap between the different ETFs, without question, they each employ a different enough strategy that I thought it would be worth pitting them all against each other to see who, over the course of the long haul, is going to come away with the title here. So if we jump right into it, I'm doing this on the SoFi platform. SoFi makes it very easy to just set up automated investments. So if you've got $5 to spare and you want to throw $5 at something on a weekly or biweekly basis or whatever amount really, you can do that pretty freaking easily here with the SoFi platform. So these are our 8 ETFs. Now I've been at this for 6 weeks now, $5 each for 6 weeks. We have $30 now of capital invested in each one of these individual funds. Now we did get our first dividend payment last week out of DHS. DHS is the only monthly paying ETF on this list, so they were the first ones to give us a payment. It was just 4 cents, nothing to get super excited about, but that is the first one that came across with a dividend. The rest of these are going to pay on the third month of every quarter, so 3, 6, 9, 12. And it looks like as of this week, we have a new one on the top of the list here. We've got SPYD, State Street's high dividend yield ETF, or the Spider, as a lot of people refer to it as. This one has a very unique strategy. It's one of my favorites that I have people in the tier 4 group that I talk about on the channel, investors age 54 and older who are looking for immediate income. Take a look at it. It has a very low expense ratio of just 0.07%, and it has just 80 companies. It has the 80 highest yielding stocks within the S&P 500. So very straightforward strategy. Nothing too exciting, but definitely a solid fund for people that are seeking immediate current income. This is just a nice, stable performer, usually yields in the high 4s to maybe as high as mid 5s. And to be quite honest with you, I am not surprised that this is the one that's performing the best as of right now. We're up 92 cents overall on it. The reason it's not a surprise is because if you've been following my Friday videos where I go over each of the 4 tiers, which are a total of 60 stocks broken down into 4 separate categories based on your age, the tier 4 age bracket that has 10 of those stocks has not seen a lot of undervaluation in those 10. The high yielders have been performing quite well ever since I launched this channel back in June. So I'm definitely not surprised that SPYD is performing strongly here. So I thought I'd just show you on ETF.com. Shout out to them. They've got a nice list here of all of the holdings in SPYD. Now it's equally weighted, which just means that there's basically about the same amount of capital invested into each of the 80. So it's not weighted by market cap or anything like that. It's just straight across the board, the top 80. And I just thought, scanning through that group of 80 not only are there several of the stocks on the tier 4 group that are sitting in this ETF, but there's also several from my bubble stocks list as well, which were the stocks that almost made my group of 60 that the channel focuses on, but didn't quite make the cut. That was more my top 100 stocks, if you will, if I went down to that far. But a lot of good solid companies in here. WEC Energy, Edison International, American Electric Power, good solid companies, not anything too exciting. We've got AbbVie, which is one of the stocks in the tier 3, age 42 to 53 investors. Sitting in there, we've got, let's see here. I know we're going to have a few more. And their Mid America Apartment Communities didn't make the tiers, but certainly a REIT that I like quite a bit. Um, Let's see, and there's Realty Income. There's one of our tier 4s right there. Altria Group and Verizon. They're both in that tier 4 group. Let's see, and I'm sure there's probably going to be some more in here. One Oak, stock ticker OKE. They're in that tier 4 group. And I've got to think Prudential's going to be in here as well to round out that tier 4. T. Rowe Price is in the tier 3. Oh, there we go. There's Prudential Financial right there. So, yeah, definitely like the way that this portfolio is constructed. Very straightforward, excellent for current income seekers. And as I've been pointing out every Friday, we've seen some value in the tier 1, the tier 2, and the tier 3. Tier 4 for a few weeks now, none of those 10 stocks have been even 20% undervalued for a few weeks now. So what happens in that scenario? Well, I generally tell people, hey, it's a good idea to just go hard into SPYD because at least you will get the diversification that fund provides you automatically without having to, risk any capital on a single stock that's just fair valued or possibly even overvalued. And always go for diversification in ETFs before reaching on a stock just because you want to have that one particular stock. So definitely not what I would have predicted when I started this series a few weeks ago, but SPYD pretty strongly out in front. And as you're all aware, we've had a bit of a down market. Monday was a tough day. Today we've seen some recovery, but kind of just trading flat for the most part right now. I went ahead and added to the spreadsheet here so we could get a little bit of a clearer rundown in terms of dividends and whatnot. So you can see here we've invested 30 each into all of these for a total of $240 running right now. As I mentioned, only one dividend payment's been collected so far from the monthly payer DHS. So in September, we're going to start seeing dividends coming through for all of these. I've got our share counts here. And you'll see, I've been at this for 6 weeks now, $5 each into all of them. Don't have a full share of anything just yet. But that is perfectly fine because if you'll look over here to column J, I've got the annual forward income that each of these positions is going to be generating based on our $30 that we've put in here. And you can see we're already, in just a few short weeks, we're up to $7.71 worth of forward annual income. So this is just going to continue to gradually increase as we move forward. When dividends get paid out and automatically get reinvested into the underlying ETF, that'll help with that number as well. And our yield on cost hasn't been impacted yet by dividends being paid out just yet, but these 8 across the board, we're averaging about 3.25%, so not too bad, not too bad. We've got some lower yielders like VIG, DGRO. Both of these usually yield in the high 1s or low 2s, and combine that with higher yielders like SPYD, VYMI, or High International Dividend ETF. Just got a pretty good, solid balance here. Plenty of diversification and strategy along the way with this portfolio. So I'm really liking how this is coming along so far. Definitely excited about it. And we're right now down, and this is still updating live because the markets haven't closed just yet. We're down 26 cents overall. So as I've said, everything's just kind of trading flat, which is fine with me. It's giving me time to just continue to build up these positions, get more money into them before we go through another upward turn in the market. If the markets go down, we'll just get an even better deal across the board for our $5 each. So one last thing I want to share with you. So this is a new idea that I had for this particular series. So if you are not aware, I'm sure probably most of you are at this point, most of these platforms like SoFi, Robinhood, etc., have referral bonus programs. Now, I always put a link to referral links in all of the videos to my Robinhood and my SoFi. I don't really care that much if anybody clicks on one of those and signs up for one of them. I'm not in this for the money whatsoever, but I did think it would be a fun idea if you click on the SoFi referral link in the video description below. If you don't have a SoFi account or brokerage set up just yet, you can get $25 if you fund an account with $100. So click on the link, put $100 in the account when you sign up, and you'll get, once all of that goes through, it's not instantaneous. You usually have to wait like 5 to 7 business days, but you get $25. And then for my end of it, the referral bonus that I receive for you clicking on my link, if you send me an email at dgicrab@yahoo.com and let me know, hey, I clicked on your link, signed up for SoFi. When you get your money, this is what I'd like you to do with it, and I will invest right here on this platform for everyone to see. I'll use that money on whatever you would like me to invest in, and I'll hold it forever. The only conditions on what I will or what I will not invest in is I don't want to invest in any of these 8 ETFs because I want to keep the amount of money we have in them the same. So I don't want it to affect that. And I also want the investment you recommend to be something that pays a dividend. So it can be a stock, it could be an ETF. I don't care. It just can't be one of these 8 ETFs. It has to be something that pays a dividend. So if anyone is interested in adding a little flair here to the channel and this series, click on that SoFi referral link in the description below. Get your $100 in there, get your $25, and send me an email and let me know what you'd like me to put my part of that referral money into. And I'll put it in here and I'll hold it forever. Unless you tell me to put it in a company that goes out of business, then we might have to get rid of it or cut our losses. But I think most of you out there know that that dividend paying companies are probably going to be pretty safe. But thought that'd be fun, just floating that out there. Let me know what you all think about our race here in the comments below. Which of the 8 ETFs are you going to predict will be the best performing by the end of 2024? Do you think SPYD will remain on top of the pile, or do you think something that typically grows a little bit faster in share price like SCHD or VIG will eventually take the lead? Let me know what you think. Thank you so much for tuning in. This is Colby the DGI Crab, and I'll see you next time.